Good afternoon and welcome again to Money Tips. This is Charles Kelly. US stocks have fallen again this morning, had their worst day since the start of the pandemic on Wednesday, and they're falling again today. Today is Thursday the 19th of May, by the way, in case you're watching this tomorrow or whenever. All of this goes out on YouTube, so it might be watched next week or next month. But as of this week, the stock markets are falling again. And this morning, global shares fell. This is Thursday morning on the back of that US fall, having their worst day for the last 2 years. And, we see stock markets going down around the world. The NASDAQ fell nearly 5%, 4.7%. But that's they bounced back a little bit this afternoon. And maybe by the time you look at this tomorrow, they may have bounced back further. You might think, what's the problem? But the long-term decline is there to be seen. And if you look at it over, say, year to date, it's down 18%. That's nearly 20% down year to date. If you go back a bit further, it depends on when you look at it, of course. But the Dow Jones, which is the Dow Jones average, is the larger, more established companies, is also down 14% since the start of the year. So this is quite significant. This means trillions and billions are being wiped off the values of stock markets. And the reason is because sellers are just selling off. They're not confident in what's happening with rising prices and slowing economies around the world. So it's natural that they would want to sell off. Now, when you sell off shares and they drop 5%, then fund managers will then go back in and buy those stocks again, because they think, they'll buy on the dip. So you saw it's not only high-tech stocks in the NASDAQ that have been falling, it's staples like Unilever, which is a big manufacturer of everyday goods that you would buy in your house, like soaps and powders and washing powders and all that sort of stuff that you would buy. A very good company. If you get it at the right price, it's a very good long-term investment. They fell by 4.4%. Tesco's by 5%. Tesco's is one of the biggest retailers in the UK. Very stable, established company, been around for years. Also falling. So if a fund manager sees Unilever go down by 4 or 5%, they think, well, I'll go and buy those. They look cheap. Just like if you went to buy a car and it was originally priced at £20,000 and you saw that there was a 5% discount, which is £1,000. Maybe you said, well, I'll buy that because that looks cheap. It's the same thing with shares. So shares can go up and down, but the long-term decline is definitely there to be seen. You can't just deny it. I mean, you can't just go on one day, of course, but it looks to me like there's already been a correction in the market, and there could be even a crash and a long-term decline in the market that could go on for years. We could see the mother of all crashes in this kind of climate. But we don't know, because the central banks can also come in and pump the market up by printing more money. But this printing of money is part of the cause of inflation, of course. We know this. We've been talking about this since before the Ukraine war. It's been, the last 2 years I've been saying that, if you keep printing money, just like they did in Germany in the 20s, in countries like Argentina, Venezuela, Zimbabwe, it causes inflation and sometimes hyperinflation. So we see that inflation, 9%, which is just crazy. It's nearing double digits now. And that means that the buying power of your money is going down by nearly 10% a year. And if your money's sitting in the bank earning next to nothing, then and you say you've got £1,000, next year that £1,000 will buy the equivalent of £900 because it's lost value. Yeah, and then some of the stuff you want to buy would have also gone up as well. And then what do you do? So, but I want to show you a chart. Because inflation is called the CPI index, but you could look at it another way and look at the retail prices and how much they're going up by. So have a look at this chart, and it shows you that although the inflation rate is officially 9%, retail prices, all prices excluding housing, is going up by 13%. And some would say even higher. Manufacturers' prices are going up by higher than that figure. And then you look at commodities that manufacturers, companies have to buy and have to pay for. Oil, wheat, fertilizer, all gone up. And animal feed for farmers. So if these are going up by between 50 and 100% in some cases, what do you think is going to happen to the prices in the shop? If manufacturers are paying 15, 20, maybe 50% more for the things they need to buy to manufacture goods, are they just going to absorb that and swallow it? No, they're going to pass that on to the companies that buy their goods, and they will pass it on to the retailers. So it's you and I that will pay for the mistakes of the governments and the central banks over the last few years by printing all this money, telling everyone stay at home, don't worry, look after yourself, protect the NHS and all that stuff. And now we are going to have to pay for it. I've been saying this, that we will be the ones paying for this. Now our grandchildren will be the ones paying for this for decades to come, possibly. Because I've lived through an area of inflation. It's not that easy to get rid of it. You can't. It's not just like pumping money in and propping the market up as they've done for the last 10 years. In fact, it's very difficult to get rid of inflation. And if you look at the way, I'll just show you a few charts here. Look at the headlines of the markets here. This is not a one-off dip here. Dow drops 1,100 points, the biggest decline since 2020. The Dow is the main more established stock market in the UK. S&P 500 really down. NASDAQ is the tech shares, the big tech companies in the the FANGs and that sort of thing. They're down 20% near enough this year. Even companies like Cisco plunged 12%. Stocks fall on Thursday. The S&P on the brink of a bear market. This is CNBC saying this. The S&P is on the brink of a bear market, and I'll show you a chart for the S&P. They're really down heavily. So it all points to me to a coming recession that's on the way. And as I said, they can manipulate the stock markets and that sort of thing, pump them up, but they can't really manipulate inflation. In fact, even the Chancellor here in the UK, Rishi Sunak, was under pressure from the opposition to do something about rising prices. And he more or less said, well, there's nothing we can do. This is a global problem. And they always kind of blame the war. But of course, it's not really, strictly speaking, the war. It's because of the sanctions that the West has imposed on Russia. Because if Russia was able to keep supplying oil and gas and wheat and that sort of thing, then there wouldn't be these massive price rises. The massive price rises are caused by shortages. Then you have this problem in China. They're still locking people up, and that's causing a supply problem. But I think the underlying issue is definitely the massive money printing, what they call quantitative easing, that's gone on. And now most of the Western countries now are heavily in debt. The UK spent 300 billion getting through the pandemic. I mean, it's like nothing's been seen like this since the Second World War. So someone's going to have to pay for this. And although the government are under pressure to cut taxes to help people through the pandemic, what can they do? If they cut taxes, they're cutting their own revenue, and that means that they're going to have less money to pay the interest on their debts. If they put up interest rates to cut inflation, which they will need to do, they've already done it, 3 times, then they're also going to have to pay more money, more of taxpayers' money to service the debt that they've already got, right? So they're in between a rock and a hard place here, and that's why I don't think there's going to be a quick fix for this. There is some good news. I mean, jobs are up in the UK. There's still a large number of job vacancies, and yet there are still people on benefits, and yet there are still the Labour and the Socialists calling for more help for people on benefits, raise benefits and that sort of thing. And yet there are jobs out there. If you walk down the high street, you just see staff wanted, this one. I know they're not massively high paid jobs, but they are jobs. And even in most industries, they need staff. There is a shortage of staff. So that is some good news on the horizon there, that at least the job market is doing okay, and some parts of the economy are doing quite well. But this inflation will come back to bite us. So what can you do? How can you protect your money against inflation? How can you preserve the value of your money? But not only preserve the value of your money, Can you increase the value of your money? Because that's the idea of an investment, not just to give you back the same buying power that you've got now. You want to increase the value of your money so that you've got more buying power in the future. So how can you do that? Well, one way is to invest in what I would call real assets. And this is where if you invest in a fund, a pension fund, a mutual fund, a unit trust, that they will invest your money into real assets. They've got millions coming in every day. They have to invest it in the market. That's one of the problems they have. But you and I don't have to put our money in the stock market right now. You can pull it out. But a big fund manager, or Legal and General, or BlackRock can't just sell everything off on the market. The market would drop by default just because they've done that. So they've got money coming in all the time, but they invest it in real assets. They invest it in things like property, commercial property, and in good companies. They'll invest in the Apples, the Coca-Colas, the McDonald's that are good earning companies that will are likely to make profits in the future, that are likely to go up in value in the future and pay them dividends. Just like if you buy a good property, or a commercial or a residential rental property, an office property that's in a good area that will produce rent in the long term, then that property will generally go up in value and also give you rental income, similar to what you might call dividends in shares. So that's one way of not only protecting the value of your money against inflation, but actually increasing the value of your money with inflation. So what I'm saying to you is, instead of saying, what's the government going to do for me? What can I do? What's the government going to do about it? Maybe you should do something about it yourself. Maybe you can row your own boat through these choppy waters, as I call them, because it's like a storm out there. It's like the Atlantic in the winter. It really is like a tsunami coming. So you've got to do something yourself. So to help you do that, I've got a little talk coming up on Saturday morning called UK Property Talk, where I talk about property and what the type of opportunities you can make for yourself in property to increase the value of your savings and to make money even if you haven't got any savings to start with. And it doesn't mean you have to go out and buy a buy-to-let. There are lots of other ways in property. There are lots of funds in property where you can make money. So join me on Saturday morning, 10 a.m. UK time. I'll put a link up there. And you can then find out how you can invest in assets such as property, and we'll look at some of the ideas you can and strategies you can put in place in property so that you can get through this and come out thriving at the other end. Yes, the markets can change. If the stock markets decline, property could also go down in value, but good investors can make money in the market when it's going up, down, or sideways. So join me on Saturday morning for that UK property talk. It'll last about an hour, and from there I'm sure you will have a little bit more knowledge and maybe a bit more motivation to do something about this, because the government, frankly, are not going to do much for you. You've got to do something for yourself. Like John F. Kennedy once said, ask not what your country can do for you, ask what you can do for your country. One of the most famous sayings of a president. So that's what I'm saying to you. Join me this Saturday morning, 10 o'clock. I'll put a link up there. So thanks for listening. Do love your comments. Please like and subscribe, and do keep your comments coming. I do try and reply to all the comments if I can. So keep those comments coming. And I will see you again on the next podcast. But I hope to see you on Saturday morning for UK Property Talk. Join me there. Thanks very much. Bye for now.